Hello, everybody. Welcome to the Flow Show. Good morning, gents. How are you doing today?
Good morning, mate.
Hello.
Stell's with us, Mr. Backend himself. He's been doing a sterling job the last few days. While
Sterling, I don't think I want to be compared to Sterling, but yeah.
No.
I could compare you to Drachma if you like.
How you doing, Ryan? Are you good?
Yeah, all good, mate. And big thanks to you for keeping all the cogs clunking behind the scenes, mate.
That's okay, man.
Behind the scenes.
We're all one team.
One team. No iron team.
Apart from tomorrow, actually. Tomorrow, Kay is going to be on his own, so it's going to be a shorter webinar, and probably a better one than usual.
You never know. I might pop up and spoil his fun. I don't know. We shall see.
Enjoy your birthday tomorrow, mate.
Yeah, thanks, mate.
You know, officially, your life starts tomorrow.
Does it?
A man's life starts at 50, mate.
It does.
What, the downhill part?
No, yeah. Look at Stel. I mean, surfing, having good food, driving nice cars. I mean, it's all happening. You probably
if you exclude things like
pay the Euro Millions, right?
Yeah.
Does that mean Stel's buying me a car for my birthday then?
Sorry, say again?
Does that mean you're buying me a car for my birthday then?
Maybe a model one, a little one.
Even the dinky toys are expensive these days. Huh?
Yeah, you know what? I bought a miniature 1/18 scale of model of my car. It was like 300 quid. I'm like, what the hell?
The original ones, they are very, very expensive.
They're not cheap.
Yeah, I'll probably get a Lego one. That'd be my lot. Anyway, let's get back to business. Well, actually, there's not a lot going on, but we've got a busy day ahead, and obviously the ECB is going to be one of the main focal points today. So let's just get all the bits and bobs out the way. PBOC, they fixed the rate today down at 7.1570, so another lower fix there, below the 7.1638 yesterday. But we have seen a bounce in one pairs at the moment. So a little bit of maybe a yield follow, I should think, at the moment. You could almost compare this one to what's been happening in dollar yen and indeed some of the other dollar pairs. So not really moving around so much on China's fundamentals, more a bit of a follower at the moment. So it's the picture is a bit unclear trading wise. I like to have definitive angles when trading this one, i.e. what is the PBOC doing? You know, are they letting it weaken? Are they putting the brakes on? That's where I mainly look for my opportunities here. So a bit of waffling around. Z said that he's willing to find ways to get along with the US on Chinese state television, whether that was one of those presses where for Western ears, so to speak, rather than for domestic ears, because they tend to do that a lot in China. You have to understand there's always two sides. There's what they issue globally, statements, comments, that sort of thing, and there's a different line they take domestically. But anyway, that was state TV saying they want to get on with the US. We'll see what happens with that. There's been no detailed talk about meeting with Biden, although it continues to be floated around now and again. Over to Japan, Suzuki, as per usual, out with the usual FX lines, but apparently the stimulus measures are going to be announced tomorrow. So it's somewhere in the probably the 25 to 30 trillion mark for Japan, what stimulus the government's going to do. Apparently we may get all that or closer ideas on that tomorrow. We'll see what happens. Obviously tomorrow morning is the Bank of Japan coming early. Bit of a strange one being a Friday, but that's when it is anyway. So we're going to find out a bit about what the Bank of Japan's going to do. Are they going to signal any sort of small language changes? Obviously no change to policy expected, but it's going to be all in the language, and they're one bank where single words can matter. So any little hint of potential changes and we're likely to see yen pairs reacting quite strongly. If it is all unchanged, it might give dollar yen a bit more of a lift, undoing some of this move we've seen over the last few days. I am itching to be short again, but I'm not chasing it down here. I didn't want to chase it since about 148. I'm definitely not chasing it down here. I'll need a very good rally to get me looking at shorts. I may not even touch it until the Fed. See what happens over the days ahead. What do you make of the Japanese stuff, Kay? Is this stimulus package going to make a big difference? Is it going to be a market mover, or we know roughly?
It's not. We know. We know that they've been talking about it for weeks, but so it's not going to change anything. But it just confirms the fundamentals that putting stimulus in place is never. It increases government spending, and it increases also for me the risk that Bank of Japan is just going to continue because they have to sponsor the whole thing. So it does water down the yen again, in my opinion, just from the fundamental side. We've seen a big reset here in positioning, I think, for the dollar yen, but then. Yeah, stimulus packages, but there are no new feet in Japan, but they have been the under the surface one of the reasons why the yen is continuing to find sellers on rallies, and yeah, I think the stimulus package over there is just adding to the pressure on the MOF, you know.
Yeah, and what do you think for the Bank of Japan tonight?
Bank of Japan. Well, base case is nothing, but I've been repeatedly saying that Kuroda is somebody who can all of a sudden surprise the markets. So the last one was about 5-6 years ago when being at what is it, the stuff in Switzerland there, the
Davos.
Yeah, the Davos meeting, when he all of a sudden went while laughing his brains out, he said they were going to do QE and go negative rates, and he made the dollar yen move like 5 big figures. So he could surprise. He has been saying again that he won't change anything until the end of his tenure as a Bank of Japan governor at the end of March. But never say never. And if there is and I've been saying that before, if there would ever be a window for them to change something, it's now. It's absolutely now. When the yen is weak, when the rest of the central banks are hiking like no tomorrow, I think it's the perfect window. And also the negative yields have been weighing on the local banks. The regional banks, the weaker yen has been weighing on the importers, with the exporters being less buoyant because of still supply constraints, and etc. etc. There's never been a better window to do something. So I don't know, is he going to surprise us? But I'd say base case, everything stands still, but as you say, and as we've been saying in the chat room as well, there may be some wording to be adapted, at least for them talking about what should be going on with YCC. I think the only thing really where we can expect something is on the yield curve control, right?
Yeah.
They could start to hint to widen it to 50 onto 50 BPs. It's a big move because it's doubling the band. So for Japan, it's a big move. So we really have to be careful going into the Bank of Japan. Right?
Yeah, and just as we're talking about this, there's headlines out from Japan saying that the final draft of the economic package, the government outlay for economic stimulus will be 39 trillion yen. The total size of the planned stimulus package is around 71.6 trillion yen. That's a final draft of the package that Reuters are printing. So 39 is maybe a bit of a top end of expectations, but we know it was going to be there or thereabouts.
It's more than expected, because the expectations was for, if you put it in dollars, for just below $200 billion, and this at today's rate is about $270 billion. So that's that's a big add-on. I mean, wow. they're really throwing the kitchen sink at it.
Yeah, exactly. So maybe we'll see. Maybe that will cause the Bank of Japan into some sort of move or change in language. Probably not the hawkish side, but we saw from what happened with the UK when they announced big potential stimulus packages, tax cuts, and that sort of thing. What happened to yields there? So at the very least, we might get some pressure on the top side of Japanese yields, which will force the Bank of Japan to buy even more of their own market. Anyway, we'll find out what they say about that tomorrow. Over to the UK, not a lot going on. Rishi Sunak apparently might axe a lot of the tax cuts that were prompted or put into Truss's plan. So he may put the marker pen through some of those. He's pretty much got his cabinet in place now. And there's also some news about he's going to be potentially going over all the Brexit stuff as well, to see what can be changed, what can be negotiated. Fresh eyes coming in on that, apparently. A quick look at the data. We had new home sales yesterday in the US. That's where we're going. So yesterday, bing, bing. So yeah, we'll talk about obviously the Bank of Canada, but just to get the data out of the way. New home sales were down 10.9%. Well, they did beat expectations, coming at 603k versus 585k expected. On the price front, though, we saw a jump in prices to median prices to 470,000 from 436,000 the month before. So we have been seeing price weakness coming in elsewhere, but again, we've got a bit of data that's bucking the trends there. So prices are still elevated, going higher as far as new home sales are concerned. So just a couple other highlights, news items. Well, one other one. Putin has been talking this dirty bomb stuff. Yesterday, he said he was aware of Ukraine's access to a dirty bomb or potential use of a dirty bomb. This is something that keeps floating around during the day, comments on what's going on in the UK. Call it false flag, call it whatever you like. That's where we're heading at the moment. There was another story out, I think it was the FT, saying that the US is going to speed up putting updated nukes around Europe. None of this is obviously good news. The market is probably sticking its fingers in its ears over this sort of stuff at the moment. No one wants to think about if it actually happens that we get something as bad as that. But these headlines are still floating around. So let's take a look at the Bank of Canada, because two things have come from this. A, they've slowed down their hikes unexpectedly, going from 75 pips expected to a 50 pip hike. Macklin was very, I'm not going to call him dovish. He was a bit bearish, a bit cautionary, or very cautionary on the economy, and particularly the trade-off between fighting inflation and how hikes are affecting the economy. So very cautious, as I say, about as close to talking about a pivot as you probably could get without actually mentioning it was a pivot. But they still said that rates will be continue to go up, and that the decision on the size of hikes will be determined meeting by meeting on the data, so on and so forth. So aside from that, what that has done is that's fed further into the Fed narrative of potential slowdown in hikes. Usually you'd get the Bank of Canada following or matching what the US is doing. Now they've stepped ahead of what the US is doing. Obviously, they've got to look after themselves first, and he made that perfectly clear when asked a question yesterday about, what the Fed does. Does it impact what Canada does? And he made it very clear the US does for the US, Canada does for Canada. But it's still fed in, as I say, into the narrative. Dollar CAD had the expected pop on that less than hawkish hike, let's call it that. Had a bit of a run up. I did have a little sale up there because I thought the narrative for the Fed is still the bigger narrative, and that's not changed, and the dollar's basically been sold for the last few days. So that was a little bit of a fade attempt that I tried in that. And I think what we saw in that price action is going to be what we're going to see versus other central banks. It's still the Fed, the main game, whether they're on the hawkish side, whether they turn on the dovish side. So they've been hawkish for the last few months, and we've seen dollar gain and yields gain. If other central banks start turning around as well, we're basically going to see the opposite of what we saw in the hike cycle, as we will in the slowing cycle, let's call it that. So I think any dollar rips we get in particular pairs are going to be rally sold. But the closer we get to the Fed, the more I'm going to leave it alone, because I want to see where the dollar is going into it. What is the sentiment going into the Fed? But anyway, back to the BOC. What did you make of that yesterday, Kay, or still?
Hey, I actually missed a minute or two of what you were saying because I had to answer the door. But Bank of Canada surprised me, definitely. I don't understand why they, excuse me, why they surprised the markets. They could easily have done 75, that was expected, and then guide lower. It kind of worries me because I think it's showing the way things are going to be going. So I think that we had the UK first with the whole pensions issue, buying bonds again. Now Bank of Canada is doing a step. It's not a big step, but they're doing something different, more dovish than expected. Definitely, I know they did say the size of the hikes is going to depend on data, blah blah blah. But really, we look at actions, and the action yesterday was more dovish than expected, the end of story. So I have been saying for a while that I think the turn from the Fed is coming, and it's coming probably sooner than people think. I think Q1 2023 is when it happens. And moves like this from the Bank of Canada kind of reinforces for me the fact that they understand that things are fragile, markets are fragile. I don't know what they're thinking, and I don't know what they know, but for them to kind of start to change their course a little bit, but they're changing it already. It just makes me think that maybe the financial markets are a lot more stressed and a lot more on like a fine edge than I think they are. So for me, I have no doubt this was a dovish move yesterday from Bank of Canada, no matter what they say afterwards and how they spin it. And I think we're going to see other major central banks and the Fed do the same sooner rather than later, as Steve would say.
Yeah, definitely, mate. What about UK?
Yeah, I think as well, it's was a dovish hike. He was trying very hard during the presser to not come over as admitting that he's pivoting. I was a bit surprised by the way by the reaction of the Canadian dollar, especially not really versus US dollar, because the market was very much in a sell dollar mode yesterday, until yesterday at least, and until this morning. But even through the crosses, Canadian dollar didn't lose much. But yeah, it's the what is it, number 4 central bank who is starting to hint to the markets that over tightening may be just a little too much to ask. So we had RBA already underwhelming with their 25 BPs. The RBNZ telling us even earlier that they may come to an end, or at least monitor very closely what's happening at the end of the year. And then we had, which went a little bit unnoticed, but then all of a sudden yesterday we did have a pretty big move in the mix. But I think it was earlier in the week, Banxico said that they may not follow suit on all big Fed hikes in the future. And so this Bank of Canada is number 4. So yeah, we have to take it into account, I think. This being said, I mean, looking ahead to the Fed, if Powell doesn't change anything, I'd be a bit worried if I would be short dollars come next week. But that's music for next week. So, and it makes the ECB meeting somewhere even more interesting, even though they should be somewhere on autopilot. But if they give a hint that they are not going to bring QT forward also, it may be the fifth central bank who is hinting at something, and Estelle said not wanting to break anything more than being overly, how shall I say, more than wanting to pivot because the economies are so bad. We know the economies are not very good, but that's those are early signals. So I was a little bit dovishly surprised as well on the CAD.
Yeah, chaps, one more thing I want to add, if I can. You know that we had the Trader Summit last weekend, and we had Danny Blanchflower. Hold on, what's up? Hold on 1 second. Sorry about that. We had Danny Blanchflower, right, who was, by the way, great debate, and who was an ex-Bank of England MPC member. And he said something very interesting. He said the way central bankers work and make the decision is they try to project what the economy is going to be like in 2 years' time, because they know there's a lag in everything they do. I think he actually said 1 to 2 years' time, but you know that there's a lag at least 6 months. You hike rates, you see the results 6 months out, and if not more. So the Fed at the moment, they're trying to understand how their sudden and fast hiking is going to affect the economy a year from now. And on the other hand, though, so basically they're trying to understand that. So you could theoretically see them take the foot off the accelerator a lot sooner, a long time before they actually see a big change in inflation and all that, all those numbers. On the other hand, though, they have the pressure of not looking like idiots and losing the credibility by putting taking the foot off the accelerator too early. Because if inflation is still running at 7%, you can't just say, "Oh yeah, that's it," even though it might be the right decision. So theoretically, they're going to kind of overdo it again with the hikes, and because they kind of have to. So it's. I think we are getting to the point, we're already at the point where data is turning and where things I think are going to start slowing down. Inflation is going to come down in 2023. I'm convinced of that. But the Fed, just to save their credibility, and the other central banks, I think they're going to probably stay on the accelerator for longer than they should. So just something to keep in mind for all these people who are hoping for a U-turn, for a pivot next week by the Fed. I think this is one of the reasons why they won't. So I agree with Ryan when he said that going into the meeting, I think we should be selling rallies in dollar, buying dips in equities. But over the meeting, I would be very, very scared to be short dollars.
Yeah, no, exactly that. And I've said it all along that they've hiked so hard and so fast, they have no idea what that's going to do to the economy. I think their soft landing is out the window. I think they're going to get kicked in the arse. But like you say, that'll be 6 months down the road when we might see that, or 3-4 months down the road. But anyway, the Fed will be obviously the big conversation we'll have next week as well. So let's get stuck into the ECB and what's going to go on today. Expected, if we take all the ECB talking heads into account, we are expecting a 75 pip hike today, with potential signals for a 50 in December, and then maybe a pause from there on in. So really the conversation or the market moves are going to be on whether we get that or get something different. Of course, if they don't deliver a 75 pip hike and go 50 with a view of 50 in December, that's going to get battered by the market, and euro's likely to dump all the way back down again. It could be a case of a bit of buy the rumor, sell fact here. So bear in mind what we've seen in the euro at the moment, and where it's gone over the last few days. Quite a swift move. Take from last week, we're talking, from the 97s up to the parity mark, nearly 101. So that's quite a big move in itself. So they've got to be really hawkish to potentially see the euro rocket even further from here. And as we know from history, even when hiking, Lagarde likes to keep things as calm and even with a dovish slant as possible. You're not going to get a Fed power type hawkish slant from Lagarde. I'd be very surprised if that ever happens. So for me, going into this today, I think the bigger price risk is for disappointment, i.e. that will bring the biggest pit move, and that'll be for the downside, versus what may happen on the upside going in afterwards. So it could be limited. I was doing a bit of chart drawing today, just to show you. This really shows you the scale of what we've got to do to turn this trend around. This has been a real long trend, and even what we're seeing now, you know, significant moves pip-wise off the lows, but we're not even close to the 38.2 fib of this whole move. And for me, the fibs give me an indication of where we are in the trend. You know, this is on a longer term basis, this could be just a dead cat bounce. Unless we get up to this 38.2 fib and get above it, you can't really say that the trend is changing. Yeah, you know, we can have some trend lines coming down on here that show breaks like this one here. But for me, it's the fibs that really tell me whether a trend is changing or not. So with that said, I potentially don't see anything that sends us really higher. The ECB or the Eurozone, Europe, is in the same boat fundamentally, facing economic weakness, still with the war on its doorstep, still with the energy problems. There are still far too many reasons to be bearish the euro than there are bullish. What we're seeing in this euro bounce is more from the dollar side, and market selling the dollar on the back of possible Fed pauses. So when you look at it on a fundamental basis, I still don't see a reason to buy the euro fundamentally. I think we're going to be playing still the who's going to have the dirtiest shirt, i.e. who's going to be weakest the least, who's going to get into a deep recession, who's not, and the US is probably still going to be the best of the bad bunch, which will keep the dollar bid on that fundamental aspect. So really for me, if we get a look up to that fib, it's going to take some big news. If we don't, I think we're going to possibly see some ranging going on, a bit of consolidation, maybe through the winter. Obviously, depending on what the Fed does next week, will be a decider. But I'm potentially looking at something in maybe 102, 103s up top, and maybe down to that 98, 97 down below as a range to trade in, maybe through the end of the year into next year. But for the ECB, as I say, I see the bigger price risk at the moment on them disappointing. If they follow through with what's expected, I don't think there's much huge upside for the euro, and what happens there may get sold into pretty quickly. Guys, let's get your calls for the ECB now. Put your butts on the line.
There's no way they're going to disappoint, my opinion. No way. 75. Now, what do they tell us afterwards? Tough one. I think they're going to stick to the to their previous narrative. So I don't see any big turns either way. Not yet. Maybe next meeting.
Yep. Cool. Kay.
Well, as I've been saying yesterday and in the chat room, to me the kicker will be what they are doing with the TLTROs and the APP. There they have wiggle room. It could be one positive and one negative as well if they decide to not remunerate all the reserves. That should be weighing on banks and perhaps be a small negative on the euro. But on the other hand, if they decide to start winding down the asset purchases earlier than what the market originally expected, that in turn could give the euro a bit of an extra push in the back. But I have absolutely no idea what the market is really wanting to do with it. It's let's put it just easily. The euro declined 5 out of the 6 last meetings after the ECB. Now we are in a different scenario. of course. The dollar has rallied a lot and now correcting a bit. But I don't know. I mean, this is really. I'm going to be, for me, the 75 is baked in. If they do anything less, it's going to be a huge disappointment. But base case is not for them to disappoint. And I can't see how Lagarde and the Doves would agree to a 1% hike. So it's probably going to be 75, and then see what they say about future hikes, APP and TLTRO.
Yeah.
So what do you think, Ryan?
Sorry, mate?
What do you think about the ECB?
Yeah. As I say, I think they go the 75, and I think they indicate maybe the step down to the 50. Obviously, they'll do the usual two sides of trade, keep the door open, as they like saying, not pre-committed, that sort of thing. I think I'll be looking. Yeah, the QT stuff is going to be big. TLTROs, that's going to be big, but it doesn't feature a lot for most traders, if you know what I mean. It's something that the propeller heads like to get into, what it means. So I'm going to be guided by what they say and what the market says. But I think, yeah, if you bet on a hawkish ECB, you're going to lose 9 times out of 10 on that. They know how to dumb down even a hike cycle. What I will be looking for is, on top of that, is if they do give us a bit of a closer indication on neutral rate, where they expect to get to, when they're going to start pausing, that sort of thing. Because let's face it, the way they talk, they're not going to get to 4.5%, 5% rates. I think they might be forced there. That's a separate thought, but they're going to have to hike rates kicking and screaming. So that's my view on that. But I want to ask you guys, just on a longer term basis for the euro, has it stopped going down? I personally think it has.
The question is against
a longer term view. We've that low into September, then we had the Fed, confirming the jump up in their ceiling, and we haven't been able to get lower since then. So for me, I think there's a real strong sign that we've got a bottom in place here at the moment. But can it go all the way back up, 110s, 115s, or is that a bit of pie in the sky, guys?
So you're talking about against the dollar, basically, or against? Yeah, I think the euro dollar is going to be driven by the dollar a lot more than it gets driven by the euro. So if you ask me, with a 6-month view, what do I think? I'll be buying it here. If you ask me with a 2-week view, I don't know. I really don't. But if I take a step back and I look at the big picture, both in terms of technicals and also in terms of macro, we are not quite at the point where I'm going to say, yeah, Europe is kind of survived this whole situation with energy and all that. But I think we're getting close to, this could have been the bottom. Let me put it this way. I think it's going to take a lot for this bottom to be challenged again, and it's going to take basically a pretty hawkish Fed to do that. So to answer your question, with a very short-term horizon, I have no clue. With a more medium-term horizon, I think definitely.
Yeah. Okay.
I think it's too early to tell personally that we have turned the corner, but I would say, and as I've said before, I think the lows that we have seen could just hold, but I think it's too early to tell if we won't go back down there. But the really much lower rates for the euro, I think that some of the tailwinds, some of the tail risks have been reduced now. They seem to have found their like gas and oil storages and stuff, and even paying more for it, and it's likely already in the flows and in the price for most of it. So, but I'm not going to call a turn in the dollar yet, if that is part of the question.
No.
I think it's still a bit too early. I want to, and the reason why I'm saying that is that mechanically QT is tightening financial conditions, and now it can also be one of the reasons why they go into a deep recession in the US. But yeah, we have seen weaker US data. We have seen the heads of the Fed starting to possibly signal some pauses and stuff, but does it? And we've seen a bit of a reset in portfolios, I think, and in but have we turned yet? I really wouldn't dare to call it yet.
Yeah, cool, mate. And come on, guys and girls in watching the show today, let us know what you think. Are they going to stick to their course? Are they going to be hawkish, dovish? Where do you see the euro dollar in, you know, short term, medium term, long term? Let us know your thoughts in there. Love to talk about those as well. I'll hand it over to Kay for the charts in a moment. Just wanted to flag up today we have got GDP data coming from the US. This is potentially going to be big going into the Fed meeting next week. We are expected to see a jump back into expansion, 2.4%. So a bit of a bounce off what we've seen the prior quarters. It can be quite volatile. If this comes in negative on the first blanch, I think it's going to tip the apple cart further for the dollar and yields, because that's saying that the US is firmly in recession. So this is going to be a big number today. I wouldn't worry too much about some of the other stuff. Don't worry too much about the PCE numbers. We do get those on for the monthly tomorrow, even though they're just going to be a follow-up to the CPI data a week or so ago. But this number here is going to be big today, so that could be another big decider for the Fed. So on that, Kay, do you want to grab the charts, mate, and if you want to have a little look around?
Yeah, sure. I mean, so we have interest rate decision at 1:15 our time. Then we have the GDP at 1:30, and then we have Queen Suntan at 1:45.
Yeah. Wicked. Busy typing fingers.
Yeah, I think I might fake a power failure, an electricity failure here at my place just for the afternoon. Oh dear. Right, this being said, I'm just for everybody to know, I'm going to be traveling extremely light into whatever happens into what's going to happen this afternoon. I've had a bit of wrong reading of the markets earlier in the week, then had some really nice trades, had a bit of a ping pong in the dollar yen this morning, and it's going pretty all right. So I mean, there's no big damage in the books, but I know I'm going to be trading very light into the ECB. So over then to euro dollar. I could put it on a slightly lower time frame to see the lines a bit clearer. So yesterday we broke this. No, the day before yesterday we broke this trend line that we have been seeing since the start of the year. The channel has been broken. So there were a few decent levels around there, even on the FIB side as well. Break, retest, acceleration, and with the global dollar sales, this thing really signaled a pretty decent break, and we have done like a percent and a half or so since then. Over to the ECB, I think this 101 is going to be a level. Then the prior high 102 is going to be a level if the ECB comes out hawkish. Has it got more power to run? I don't know, but we have to take into account, regardless what we expect on the data and on ECB and Fed is too early, but we are in full swing for end of month flows. So they are going to add to the mix, especially that we are trading value date end of month. So we may see some interest of the US corporates. And I'm saying that because usually they are rather on the dollar buying side, and the end of month models are signaling rather dollar sales. So it could get very interesting today if ever the ECB would somewhere disappoint, or the market thinks that, okay, Ms. Lagarde is keeping everything in check, and the US corporates are adding on top of that with a not too bad Q3 GDP. This thing we can't rule out at least a firm retest of this level, and why not get some stops out of the way. But that should be how shall I say, due to a combination of dovish factors for the euro and the month flow. So be very careful with those numbers. Even a break below could end up being a fake one and then go up later. But yeah, so keep an eye on if they would be having a bit of a hawkish tone and confirming what the market has been doing lately, that is to sell dollars. We could be in for a test of 102. Why not? So keep an open mind on this one. Cable. As you know, to me, the big level is around here. It's also a bit of a trend line coming in. The big level for the cable for me is going to be 117.60. And in the meantime, I'd respect the fibs a little bit, also the month-end flows. They could be driving this since there's been so much volatility in the sterling lately. Be careful with what you do, because 100 points in the cable is quickly seen. So to me, there's going to be a bit of a psychological 115 here, the prior top, and then 114. But the top side really, it could be enough where we've seen it, but I don't view 116.5 as a big level, to be fair. To me, the bigger level, and keep an eye on that. Perhaps we need to wait for after FOMC, I don't know, for a test. But the big level to me is going to be 117.60. And I never look at those, but I thought it was just a pretty picture. Dollar yen. So this is what they call a pitchfork, and I've taken it from the first. We've started the uptrend, then we had the first decent correction, taken it from the low there, and then up to the 139 and the correction there, and this is how it looks. And even if we look at, so we did a retest here, it went higher. Even the interventions, you know, they have seemingly respected it, but since I'm never looking at this, I'm going to take it away and show you what I really look at. And what I really look at is this here and here. So we've broken outside of the upward channel, but on what I suspect was the last legs, or maybe not the last legs, but Tokyo was also trading value date end of month. And this seems to me to have been the value date end of month trading in Japanese yen, and it's been going on the whole Japanese session until they're closed, and then all of a sudden we saw the reversal. So we could argue here that we are in a false break situation. So this is going to be one that I'm going to keep an eye on, a very, very close eye on, over the Bank of Japan. And then over here, 144.75 is a little bit my make or break, really. If we can compare it to when we were trading euro dollar around parity, when I said 99 is the make or break level for parity. And I consider this 144.75, it's also psychologically below 145. Below where they started to intervene again. So this one is for me really important. And then of course, if we start to hold here, why not? You know, why not? Having seen the bottom of the retracement and going back up, the fact to me is that Japanese fundamentals are still weak, and they are still in negative current account, negative trade balance, and they're putting like hefty stimulus packages in place. So this one, the fundamentals are against a deeper drop how shall I say, not a deeper drop in the yen, because that is going to depend on the dollar as well. If this if the US 10 starts to really crack, but a stronger yen. So if it's not via the dollar, perhaps other yen pairs could continue to rally. Quick look at what's happening in the tens. Upward channel tested around 4%. 4%. We've been talking a lot about this 4% mark in the US 10s. For the time being, I'm going to say it's holding, even though it tried below 4% yesterday. To me, this is holding for now. So, and perhaps until FOMC, it could continue to hold. If we start to break a little bit the same, if we start to break below 390, 395, could be on the FOMC, who knows? Then we are talking differently for the dollar. Then I think that the dollar could correct, or we could see much more, or at least more dollar weakness. I'd keep a close eye on that one. The twos are still very much stuck at 440, 450, where the terminal Fed funds rate is expected for now. I'm not here, Aussie. Yeah, I showed this one, broken the which could have been a flag, broken the flag, and we've seen the retest, and we are not far from the 64.5. Could be a bit of a fakey as well if it goes back below, so keep a close eye on 64 the figure. Otherwise 65, 20, 25, that is what we're looking at. Kiwi dollar, idem dito, flag, but couldn't stay below. The under end, the bottom end here is around 57.90.95. We're about 20 pips from there. And the top side, which we tested, was 58.75. So yeah, we've got a few levels to play with. And just to keep Stelios happy, I'm going to look at silver. Silver here, and I'm going to take this out because I think those little channels are much more interesting than any fibs or so. It still could be flagging, you know, for a lower move, but FOMC should decide. So for now, yesterday we rallied up to 1970s, respected the trend line. We are trading back down to 1935. Keep an eye on what's happening around 1900, 1870, 1850. I'd say we are in a bit of a range still here. Still, any? Okay,
you know what? I've been writing on the chat room for the last few minutes. This is extraordinary what's happening. You know, many of the major dealers and mints and all that, you know, you go and buy coins or bars, they say, yes, you have to wait 3 months or whatever, you know, there's a queue. What I saw today, it was one of these online retailers, one of the big ones, APMEX, APMEX, however you call them. They are saying, sell us your silver eagles, silver American eagles at spot plus $10.
Oh, really?
Spot plus 10. And they are selling them on their site at 37.5, something like that. And there are buyers and there is a shortage. So what does that tell us about spot? It's an absolute joke. 19.5 spot, you know, 37 dealing in the market. So at some point, because these futures, the futures prices are linked to actual delivery, right? If you buy a futures contract, you don't roll it. You ask from the seller to get delivered for the amount of the futures contract. So at some point, because I'm reading, obviously I'm not there, but I'm reading that the inventories of physical in COMEX and LBMA, they're decreasing rapidly. At some point, somebody's going to say, this is crap. You know, buy, 10, 100,000 contracts, whatever, and I'm going to hold them to delivery and see what the seller does, because theoretically they are obliged, they're obligated to give you the physical. That's going to be funny. That's going to be fun. But anyway, as for the chart, I agree. We're in a range and we're at the mercy of the Fed. Same with gold, same with silver. They're trying to bounce. And remember, we were talking about this for the past few days. We said, going into the Fed, most likely the dollar gets sold, or rallies get sold in the dollar, and risk and metals get bought. And we've seen this past few days, they start the day just like today, they're down, and later in the day they go back to positive. So what happens on the Fed date, I don't know, but this situation is just, I don't know, I can't explain it. It's crazy.
I think one plausible,
it's really, really long. But I'm seeing this price action, I'm like, not yet.
Yeah, that's the thing. I think what also can be at play is that we need for this to really ramp higher. We need the economy actually to turn the corner again on the more positive side, right? And then you got like industrial metals should. Or China opening up. If China opens up, this thing should absolutely take off, right?
I agree. But
but we are waiting, and I think what's happening as well is that perhaps the bigger players are waiting, and then I don't know if they keep it like David says, artificially low. Of course, it could be the case, but it's perhaps more a case of yes, there are shortages, but the big players are not there to go and create a vacuum, if you mean, if you want to really need them, and China coming around, or even if the US can put finally their stimulus packages in place, turn around and say like, oh yeah, we need it now, we really need it. So and then this thing is going to take off major league. Yeah, and I'm looking at the time. I just wanted to show one last one really, and that's dollar China. So they have intervened, and then you look at those corrections, and if you put it on the on a shorter time frame, you look at the corrections in dollar China. That's likely that's what we said. Those interventions of the submarines. Here we had it again. But we're seeing the same phenomenon as we've seen on the first interventions of the Bank of Japan. They don't hold. They don't hold the lows, and to me that's still telling. And I'm not ready to give up on my more bullish view on the dollar China yet. There is though an interesting level and an extension and stuff. If people look at technicals. There is this bit of a channel top end, and that's coming in the 740s, and that's 3% above where we are. CNH is still an emerging currency. It could be done somewhere over the FOMC. And with that, Ryan, I'm giving it back to you.
Thank you very much, guys. Good info as always. And thanks, Lucas, for your point there on the Fed. You're going to think that the Powell will keep his keep the pace and tone, and we may have a strong dollar after the Fed next week. Yeah, good points there, and I pretty much agree with you, I think, there. So, yeah, all that remains is to say good luck for today. Be very careful over the ECB. Make sure your positions are protected. Don't get caught out on a limb. Always look for the second wind with what happens over the ECB. We get the announcement, then we get the press conference. Sometimes the price can pause. If there's been big news in the announcement, not so much in the presser. The market waits to get the final comments out of Lagarde, sometimes before they're making a secondary wind move. So just keep that in mind if you're trading over it. Don't think that the market has stopped doing what it wants to do while Lagarde's speaking. And on that note, have a great day. Kay, we'll see you tomorrow. Maybe I'll pop in. We'll see what happens. It's going to be a good one. Thanks for coming to the Flow Show, everybody. Thanks, Kay. Thanks, Del. And you'll be seen tomorrow.
Cheers, guys.
Have a safe day, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.